Hello everyone and welcome to another Elliott Wave forecast educational video day. My name is Eric. Today is the 19th of January around 6 p.m. Eastern Time, and in today's video we're gonna take a look at the double correction. Let's start saying that we don't call it a double zigzag because on purpose we did these charts right here. When you guys see that the double, or what is called a W, X, and Y, is compound in 1, 2, 3, 4, 5, B 1, 2, 3, 4, 5, and the same in the third leg. Technically, yes, it can be a double zigzag. That's how it's popular name it. But most of the time, do not happens to be a double zigzag. Most time, it happens to be a double correction. What is a double correction? A structure that is comes in 7 swing, like the one reflected over here. 1 swing, 2 swing, 3, 4, 5, 6, and 7, in which the components are not regular zigzags. In other words, that the W is not a 5, 3, 5. Otherwise, the W himself is like a 3, 3, and 3, and then 3, 3, and 3. So that's the most popular around the market, no, the so-called double zigzag, and we believe that the double zigzag are part of a double correction. So that's what we call in general a double correction. So a double correction is nothing more than a structure that it comes in 7 swing, A, B, and C, or W, A, W, X, and Y in this no parenthesis degree. Higher degree create a W, which is 3 waves down. It makes an X to the 50 or 618 of this W, and then it makes a Y in which the Y is equal to the W related to the X. That's very common to see around the market. Let's take a look at the market and find out some real future example. Here we got the pound New Zealand. In the pound New Zealand over here, we're gonna take a look and see how the market did 3 waves and 3 waves, and that create the W in red, in which these 2 legs they were perfectly equal. Look, that 100% extension there. Then the market retreat in 1, 2, 3, 4, and then it did the triple here, but in 3 waves, and then the market again drop to create a W, X, and Y, in which we can see how the W and the Y over here becomes equal to the 100% extension, and then right there the market retreat in another double. W, X, Y in black create the red, got the red in X, W, X, and Y, and you see how perfectly over here the market makes a W equals Y over here to create the X on higher degree, and then the market start dropping again, and the market then break the lows in the W, and it goes W, X, and Y, another equal X extension there. It did a connector, then it did another equal X here to create the W. It's worth to say that this W is equal to this W in degree, and that this X is equal to this X in degree. And now we are in the process of either breaking lower to finish the over here to finish the W, X, and Y in blue and finish the whole cycle like this, and then It's too early to tell, but it is a possibility they already the second X over here, which is equal to this, is in place. If that being the case, then now the pound yen is gonna, the pound New Zealand, my bad, is gonna trade lower and it's gonna go to these areas over here, in which the W, the X is gonna equal over here related, the Y is gonna equal the W with the X, and also the W in blue is gonna equal the Y in blue related to the X. That's a WXY in the real market, and that's a structure like the one that we're showing here, perfectly seen in the market, in the real market. 1, 2, 3, 4, 5, 5, 6, and 7. It can be seen over here. 1, 2, 3, 4, 5, 6, and 7. If everything came out right, this pair should trade lower against this level or this level. It still can do the double and trade lower. And that's how a double correction works in the real market. Another one that is very nice is the pound yen or the CAD yen, which it did 1, 2, 3, 4, 5, 6, 7, 2 equal X, and then put back in the X way. Now it did 1, 2, and fifth swing a 6, and it is in the process of the 7 that it can be completed or make one more low. But this is also a WXY as reflected in that chart. So as you see, Elliott Wave give you a guideline of how the market move. It depends of the waiver to adapt to the modern times and know what are the extensions, when the W's end, when the X end, when the Y's end, and try to put in top of the map, which is Elliott Wave, letters and extensions and buyers, and take trades in that way. Like as far as you identify the W or the X or the A over here, you can sell it against this one, looking for this one. There is a lot of trades that can be taken within the WXY structure or the double correction. For more in this topic, guys, you guys can take the trial of Elliott Wave forecast, or you guys, if you are the current members, can ask us in the home and in the chat, and we are willing to explain to you guys the beautiful way that this market move most of the times in double correction or WXYs. All right, thank you guys all, and I hope you guys learn from this video.